All right, Robert, thank you very much for all that. So, even though stocks are higher now, there are some headwinds to overcome. Is this morning's rally sustainable? What do you do? Joining us is Dan Fitzpatrick, Stock Market Mentor President, Keith Springer, President of Springer Financial Advisors. Keith Springer, start with you. I guess the underlying question for me is, can the U.S. economy and stock market survive $100 oil and $3.50 gasoline? What is your thinking?
At $100 a barrel, it definitely can. I start to worry when it hits around 120, Larry. I recently paid $4. That's quite a bit, but it's the rapid rise is what's going to be the shock. The last time oil went to 140, 150, 160, it was the shock that got the economy. I think 100's really no problem. I think 100's probably where it belongs. Once it hits 120, 130, then I think you're going to see some strong headwinds and you're going to see problems. A lot of disposable income goes out the window when people start spending that much for gas.
Yeah, Dan, I mean, we had a ton of good economic news this morning, but when you look at oil at $101 a barrel, it's not even reflected in the pump yet, and we're already seeing record prices for this time of year at the pump. Do you think that that's going to derail the recovery?
Well, I think it can, but I agree. I don't think it's going to at these levels. If you look at the last spike that oil had a couple of years ago, the market was already on the way down. Now it's not. We're actually on the way up, and everybody seems to be discounting this big spike in oil because of, transient issues in the Middle East. In other words, we're really anticipating that all of this stuff is going to resolve. I don't know whether it will or not, but I know this. I think this market is sustainable. I'm a little concerned technically, but that's for another time. But ultimately, we have no place to go but equities, so I think we're good.
Guys, I was looking at a fascinating chart this morning that was comparing GDP and oil prices. And what it showed was that when you were in a situation with higher oil prices, you were in a situation in which the economy grew less. And there was a direct correlation between higher oil and less economic growth. With that in mind, Keith, should people be thinking, or I should say rethinking their investments, knowing that if this oil stays where it is, it's going to take a real bite out of GDP growth?
It's definitely going to take a bite out of GDP growth. Basically, $20 per barrel increase above $80 takes anywhere from 0.8 to 1 full percentage point off of GDP. And that's what you got to be concerned about. Higher inflation is going to take a bite. It's going to take away disposable income. But remember, this is what the Fed wanted. This is what the Fed has been orchestrating by lowering the dollar, raising commodity prices, and they want some inflation. They haven't been able to create asset inflation. Real estate is still in the dumps.
Yeah, but is that what the stock market wants? I just need to ask you, I understand what the Fed wants. Is that what the stock market wants?
Absolutely, Larry. The stock market loves inflation, not runaway inflation, but some inflation, and stocks do very well during inflationary periods. It loves the stimulus coming into this economy. It loves the fact that more money's coming in. QE2 is a given that it's going to finish out, Larry. I think QE3 is right around the corner.
So to protect yourself, real quick, to protect yourself from this inflation, does that mean you're buying equities? And does it mean you'd be looking at some commodities?
I think I look at commodities.
Yeah, you certainly buy equities and look at commodities. You look at what the retail is doing. Retail stocks are strong. Industrials are strong. Commodities, I think you got to use any pullback as a buying opportunity. We are ultimately going to get inflation. And you know what? I look at this as one big frat party, where as long as the Fed keeps opening up new kegs, everybody's really happy. Everybody's really happy.
Okay, on that note, we're going to have you both stay with us. We want to continue this discussion on the other side of the break.
Like president of the frat.
That was a knockout.